This past week in the financial markets brought mixed signals, renewed volatility, and plenty of macro headlines that shaped how investors ended the week. US stock indexes finished mixed but lower overall, with the NASDAQ and broader indices posting weekly losses amid a sell off tied to tech sector rotation and inflation signals. While the Dow and S&P 500 managed to stabilize late in the week, it was still a rough patch for growth stocks weighed down by concerns about artificial intelligence disruption and valuations. The main catalyst this week was fresh economic data that reinforced the inflation picture and complicated the Federal Reserve outlook. US inflation reports showed that consumer prices rose slightly less than expected, providing some comfort that price pressures may be cooling. But even with cooler inflation, tech focused sectors continued to lag, with heavyweights in software and AI linked industries experiencing pressure from rotation and valuation concerns. In broader market flows, US equity funds saw net withdrawals this week, signaling investor caution. Meanwhile, bond funds continued to attract capital, with investors finding shelter in fixed income amid rate uncertainty and shifting sentiment. That outflow from US equities was notable as it marked the first weekly withdrawal in recent weeks, driven in part by concerns over AI spending and a strong jobs report that dampens immediate rate cut expectations. Turning to precious metals, gold and silver saw elevated volatility throughout the week. Prices for gold hovered near significant levels, with bullion gaining in response to macro headwinds and safe haven demand, while silver bounced after sharp pullbacks earlier in the week. The CPI data and labor market strength drove swings in both metals as traders balanced inflation expectations with rate policy uncertainty. Analysts now expect ongoing consolidation and volatility in gold and silver pricing as markets wait for clarity on the Fed's next moves. Gold closed the week near major psychological levels, and silver regained footing after earlier declines, although both remain sensitive to broader macro signals, including inflation data, GDP prints, and interest rate guidance from the central bank. Precious metals continue to act as both a hedge and a volatility play, depending on incoming data and policy expectations. In cryptocurrency markets, Bitcoin and other major digital assets remained under pressure as risk sentiment fluctuated. Bitcoin traded below key psychological levels this week, with traders citing bearish momentum and ETF outflows in the crypto space. Broader crypto market value also declined, reflecting overarching investor caution as macro uncertainty overlapped with ongoing regulatory questions and shifts in capital allocation. Analysts noted strong resistance and support levels that traders are watching as key technical triggers. Bitcoin's price action this week underscores the risk on, risk off dynamic that has been characteristic of digital assets, where macro data, inflation readings, and monetary policy expectations can swing sentiment quickly. Despite that, some technical analysts believe that periods of consolidation could set up meaningful moves in either direction, depending on forthcoming US economic releases. So, what should listeners be watching for next week? First and foremost, economic data remains the central focus. Key releases, including the next inflation prints, GDP figures, and labor market reports, will help clarify where the Federal Reserve is heading with interest rates. Whether inflation continues to cool or accelerates could significantly impact equities, bonds, precious metals, and crypto sentiment. On the equity side, upcoming corporate earnings and forward guidance will be crucial. Companies across sectors, especially tech, consumer goods, and industrials, are releasing results that could either reinforce the current narrative of rotation away from excited growth or spark renewed confidence if guidance surprises to the upside. Earnings outcomes will likely be a high impact catalyst for the next week's market direction. For gold and silver, traders will be watching technical support and resistance levels and how they respond to macro triggers. Whether safe haven demand reemerges or if rate expectations shift again will influence the metal's moves. Silver, in particular, has shown heightened sensitivity due to its dual role as both a precious and industrial metal. And in the crypto space, Bitcoin's key support and resistance levels will be on watch lists. especially around pivotal inflation and Fed data releases. How digital assets position themselves around macro catalysts could determine whether crypto sees a breakout or further consolidation. To summarize this week, US markets faced headwinds from a mix of inflation data, tech sector rotation, and investor positioning. Precious metals displayed volatility, reflecting policy uncertainty, and cryptocurrencies continued to respond to broader risk preferences. As we head into the new week, economic data, earnings, and rate expectations are poised to be the major drivers shaping market moves across all asset classes. If you are interested in content like this, please don't forget to like and subscribe. We'll see you soon.